Unless you've been living under a rock, you must have seen a cricket match in the last 5 years. And when you did, there's no chance you didn't see these logos or come across these ads. In the last few years, India has emerged as one of the fastest growing markets for gaming. From the rise of mobile gaming to the surge in esports competitions, either you're surrounded by gaming news or by actual gamers. And if you think you haven't contributed to this growth, think again. Most of us spent the lockdown playing Candy Crush or Ludo King, invariably contributing to what is now upwards of a $3 billion industry, also making you just one amongst India's 568 million gamers. For perspective, this number is more than the total populations of the UK and the US combined. There are some obvious factors that have led us to this growth. As of last year, India had 820 million smartphone users. Plus, these devices are powered by cheap data and UPI payments. This geofication of Bharat has removed all barriers for the growth of mobile gaming. The fact is, over 50% of India's internet users are gamers, and that we as a country have managed to download 15.4 billion games in as of last year. India's gaming industry is mostly divided into four major categories. Casual or hyper-casual games like Ludo King, Flappy Bird. These games are easy to play and instantly playable that players often revisit because of its short duration, or as gamers call it, session time. Now, on the spectrum of hardcore gamers and your neighborhood Candy Crush auntie, somewhere in the middle lie mid-core games. Some examples of these are Clash of Clans, Call of Duty. Many times, these games are multiplayer games. You can socialize with your friends while playing them. Then we have esports. They are video games played in a very organized and competitive environment. And finally, there's real money games. Remember those ads in cricket matches? In real money games, like card games or fantasy sports, people pay money to hopefully make money. But not a lot of people know how that exactly happens. There are four ways for a startup to make money in gaming: advertising, subscriptions, in-app purchases, and commissions from real money games. In most developed countries, users are ready to pay for subscriptions, and the revenue that can be generated from ads is much higher. And hence the revenue models for gaming companies in those countries are much more dependent on these three resources. In India, nobody pays for subscriptions, and the revenue earned from ads is much lower than other countries. Let's take a look at real money gaming. Over 60% of gaming revenue in India comes from real money games. What's fascinating here is that Indians have had a reputation to not pay for digital products. And this hypothesis will be proven as soon as you ask your friends about how many screens are sharing one Netflix subscription. With 25% of total gamers being paid users, it's clear that for real money games, people are willing to shell out money. Why does a country refusing to pay up for most digital products cough up money to play on Dream 11? Is it just India's love for cricket? Is it Tier 2 and Tier 3's desire for quick upward mobility? Or is there more to it? In the last year, revenue from real money games grew by $500 million. In real money games, people invest actual money, hoping to 10x or 20x their initial investment. These games, like fantasy sports and online card games, are widely popular in India. Operators like Gamescraft, Mobile Premier League, Dream 11, and Games 24/7 have user bases running into tens of millions. The major ones also bring in hundreds of crores in profits each year, something that even prominent startups have not achieved so far. Let's come back to those ads. All these companies are fantasy sports platforms. The fantasy sports industry tapped into a cricket-obsessed nation and overcame regulatory hurdles to become amongst the most successful businesses in the Indian startup story. They have grown revenues and made profits when many unicorns are operating in losses. This video takes a look at how this industry has grown over the years and what lies ahead for it. Dream 11 was one of the first fantasy gaming companies of the internet age. It's a pioneer of India's fantasy sports industry. It created the category and scaled it like nobody else. Right now, it captures 75% of the market. So how does Dream 11 work? No matter where you live in the world, fantasy sports tap into a basic behavior and desire to compete. The need to socialize, the need to prove your skill and feel a sense of achievement. When people can step into the shoes of a team manager or owner, they become even more invested in a game that they already watch and love. And this is exactly what Dream 11 enabled for India, the gamification of fandom. Dream 11 allows users to create their own virtual teams. enter those teams into tournaments and make money based on the performance of real-life athletes in actual sporting events. The basic idea of apps like Dream 11 is that you get to create your own fantasy team or your dream team. Let's say an IPL match is happening tomorrow between CSK and Mumbai Indians. You will make a dream team of 11 out of the 22 available players from both teams. Your virtual dream team will score points based on how well your players are performing in the real match. So Bumrah making a run in the actual match will get you a point. You get 25 points for a wicket, 8 for a catch, and so on. This point system is preset by Dream 11. Fixed points are awarded for a player's batting, bowling, fielding, economy rate, and strike rate. At the end of the match or tournament, prizes are awarded to users with the highest scoring fantasy teams. Dream 11 places certain guardrails on how you form teams. For instance, you can't select 11 of your dream players from the same actual team. The idea is that you're not betting on the outcome of the match, but on how individual players perform. Another limitation is that since you have to fill in 11 slots with limited credits, you cannot have all the best players on your team. So you cannot have Dhoni, Virat Kohli and Rohit Sharma on your team. All users entering into a tournament pay the entry fee, creating a large entry pool. This pooled money is held in escrow. Dream 11 takes 7 to 15% in commissions of total money pooled, which forms most of their top line. The rest of the pooled money goes to the dream teams that have collected the most points. You might think that this sounds an awful lot like gambling. Well, it does, and it kind of works like it, but it is not. And this brings us to the next reason why fantasy sports has taken off. In British India, all forms of gambling and betting, including poker and rummy, were banned. But British officials loved horse racing and betting money on it. So they bifurcated wagering into two kinds of games. Games of skill versus games of chance. If winning in a certain game involved too much chance or fate, then it would be termed as a game of chance and hence be banned. If it mostly involved skill and knowledge, it would be legal. Once India became independent, gambling became a state subject. Many states simply adopted the British era law but made their own adjustments to it. For example, the state of Goa permits gambling and is only one of the 3 states where casinos are allowed to operate. Now that we have spoken about how the fantasy sports industry in India became successful, let's look at its future. So where do we go from here? The fantasy sports businesses are facing 2 main challenges. They are both 2 sides of the same coin. Fantasy sports rely on actual games, matches, and tournaments happening in the real world. In simple words, they are completely dependent on live sporting events. If those stop or happen only for a few months in the year, it means that the customers of these platforms are inactive. Money flows into platforms like Dream 11 only when a real sports event is occurring. For example, the Indian Premier League, India's flagship and most loved cricket league, runs for only 6 to 8 weeks. The other side of the coin is that user acquisition costs on fantasy sports platforms are massive. Industry estimates put this at about $30 or Rs 2,200 per user. This means that huge user volumes are needed for monetization. Basically, it's very expensive for fantasy sports companies to keep acquiring new users, so they need to focus on retaining the older ones. To do this, some platforms have diversified into sports adjacent verticals to keep users engaged throughout the year. For example, Dream 11's parent company also operates FanCode, a sports streaming platform. With FanCode, Dream 11 is trying to ensure that user engagement remains very high. Lumikai's annual report of 2023 suggested that growth, which was initially supposed to be 25% year on year, has now cut down to 5%. But overall, with global players like Krafton, the makers of PUBG, we couldn't go through an entire video without mentioning PUBG. And Sony investing in India, there's a lot of potential that gaming as a segment holds. The size of the gaming market is supposed to reach 7.5 billion in the next 4 years. So we are on the path to success and hopefully a better regulated market. What's really interesting to observe is in a country that is so low trusting in nature, there's still this motivation to pay up for games like these. If you learned something from this video that you didn't know before, comment down below. And hopefully you'll have some fun statistics to casually drop at your next party if gaming comes up.